especially tools to help facilitate Bitcoin as a medium of exchange?
So a medium of exchange is the most important part of Bitcoin, and I think we often lose that. I think we're in between the store of value medium of exchange part now, and it was actually one of your talks, I think you were talking about how people build apps from a Western point of view and they don't look at the limitations that are actually there. For example, data storage, connectivity, and things like that. And so it was really interesting to see the actual problems that people face across Africa and how they're solving them in a different way.
Yep, yeah, absolutely. There's not only certain issues facing Africa right now, things in the UK right now. We're seeing a lot of control, a lot of censorship, fight against privacy. Is it as bad as we're hearing on X? We know people tend to be hyperbolic on X. Should we be believing all the noise that we're hearing about this on X?
Okay, so one stat that I did hear was 12,500 people got arrested for tweets this year. So that's pretty shocking.
Yeah.
However, last week, when we were at the African Bitcoin Conference, we had a major breakthrough with the laws in the UK. So we have now a third type of property which recognises data objects. So currently in the UK, we have the first type of property, which is houses and things that you can own. The second type of more like stocks and debt. Now we have a third type of property which recognises data objects, which now means that Bitcoin is considered property. And that is a huge win.
Let's go. We like wins on this live desk. I want to go over to you, KG. I know there have been some shifting laws in South Africa, and I know with Machankora you want, so Machankora is a slang word for cash, if I'm not mistaken.
Yes.
You want Bitcoin to resemble cash as much as actual physical cash as possible, but there have been some KYC laws, some things that you've had to work around. Can you talk to that a little bit?
Yes, so basically in South Africa, Bitcoin is seen as a digital asset, right? And then the regulatory body for assets and digital assets sees it as an investment, right? So more on the store of value side and everything else that comes with it, property and everything else. And so, yeah, we are legally required to do KYC on all the customers and before we do any business transaction with them. But I think from a technical perspective, you can still do like a privacy preserving digital asset, since it's technically possible, like e-cash and everything like that.
Right.
But as long as you're ticking all the right boxes from a regulatory perspective, right? And yeah, so
do you feel like that's easy to do? Do you feel like things are sort of shifting purposely to make it more difficult for entrepreneurs coming to the space, or is that maybe a little bit too cynical of a view?
Well, I think we have to be willing to fight for it, right?
Okay.
We have to be willing to argue for it, right? We are seeing like a lot of stuff happening globally for the right to self-custody, the right to private payments, whether this is Free Samurai or in South Africa, even the KYC laws. And for us, we just got off the grey list, right? The FATF grey list.
Yep.
So now they're still going to probably enforce more and more FATF recommendations that don't necessarily seem necessary, but we have the technology to actually say, oh, you can still have that, but then a person can still self-custody and privately own their Bitcoin.
Okay, appreciate that. Ladies and gentlemen, we do have to head back to the Falcon stage. We're going to continue with this conversation right after this, but over to the Falcon stage. We'll go right back here at the live desk right after this.
Okay, let me start out. What is a DAT, or a digital asset treasury? It's essentially like a shell, normally listed equity that basically decides to hold a specific crypto asset. Bitcoin with MicroStrategy was the first one as a treasury asset. Now the question is, why should they be trading at a premium towards an ETF or the spot? I think there's like two high-level views why it could be. On one side, if you have a listed company, you basically have the asset, but as well you have on the liability side of your balance sheet, you have the possibility to do financial engineering. Something like issuing a convertible and basically selling the volatility premium to other investors. Second one is, if the management team is competent, you could expect them actively deploying their funds or their treasury assets to generate an outperformance than compared to just holding.
Okay, awesome. And why do you think they're converging to kind of premium? Do you think there's a point where these companies are going to have to start selling their Bitcoin. MicroStrategy, there's a famous kind of meme that it's I see Mo laughing over there. There's a famous meme, or there's a meme at the moment going around retail where people are saying that they're going to have to sell at 75,000. If Bitcoin hits 75,000, that could be a cascading effect. Is there any truth to that? And if so, why is that? Or is there another price or price range that makes more sense? Maybe we can start with Mo, because I see you like that question.
Yeah, I mean, first of all, thank you so much for having me. Look, I think the whole DAT play is super interesting. There's a big decision coming up in the US on January 15th. We're going to see what happens there. We as Fuse, we also have our own small treasury of BTC that we've been collecting for about 18 months now. We're long-term believers in the space, but I think there's a lot of question marks on what's going to happen. We think it makes sense, but we're going to see what happens in the States now. And it's going to have a huge impact on the whole sector on January 15th.
Awesome, awesome. And Alan, your take? Any price range or some of the mechanics that lead to forced selling or could lead to forced selling by these DATs?
I think like everything in crypto, if something is actually new and somehow works out, everybody jumps on the bandwagon and then it just goes crazy. And I think just the quality of that, if you look at the assets, you have on one side Bitcoin, on the other side you have a lot of altcoins or shitcoins putting into the place where you can ask, you really want to hold them for the next 5 or 10 years. The second part is like the quality of the management. And if you look at Saylor, and then who else can you name? It's probably Tom Lee, and that's it. So there's like a huge divergence. And then the other thing is also like, if you think the active management will lead to an outperformance, and you have seen MNAV, so that's essentially the multiple between the value of the assets and the share price, going up to 4, 5, 6. And then you look at just something simple like equity, holding passive index versus active management.